Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a lot to cover in today's show, but first, let's take a look at what's been happening in the markets. The S&P 500 and Dow Jones Industrial Average closed lower on Tuesday, influenced by declines in healthcare and energy stocks. The Nasdaq, however, managed to close higher. Investors are still trying to gauge the Federal Reserve's monetary policy outlook for next year, and delayed economic data is providing some insight. A Labor Department report showed that non-farm payrolls increased by 64,000 jobs in November, which was a bit of a surprise after a decline in October due to government spending cuts. However, the unemployment rate rose to 4.6% in November, which is added to economic uncertainty. Retail sales were also flat in October, missing estimates of a 0.1% rise. Energy stocks led the declines, falling nearly 3%, with crude prices hitting their lowest level since 2021. Health stocks also fell, with Pfizer slipping 3–4% after forecasting a challenging 2026 due to weaker sales of COVID-19 products and squeezed margins. Humana fell 6% after announcing unspecified leadership changes. On the other hand, some stocks did see significant gains. Riley jumped 53.8% after reporting a profit for the second quarter compared to a year-ago loss. Comcast rose 5.4% after speculation about potential involvement by an activist investor. It's clear that the markets are still trying to find their footing, and investors are closely watching economic data and Fed decisions to inform their investment strategies. We'll be keeping a close eye on these developments and bringing you expert analysis and insights throughout the show. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where two major players are making headlines. On one hand, we have Broadcom, a company that's been gaining traction with its impressive revenue growth and strategic partnerships. But on the other hand, there are concerns about Oracle's high debt levels and dependence on OpenAI for future growth. Let's start by examining the situation with Oracle. Despite missing revenue estimates, the company has seen significant growth in its cloud segment, with revenues of $8 billion in the quarter, marking a 34% year-over-year increase. Additionally, earnings per share came in at $2.26, beating consensus estimates and representing a 54% increase from the prior year. However, Oracle's debt levels are a cause for concern, with over $100 billion in debt and a negative free cash flow of $394 million. This raises questions about the company's ability to service its debt and invest in future growth initiatives. Moreover, Oracle still relies heavily on its slower legacy businesses, which are either flat or declining. In contrast, Broadcom has been making waves with its impressive revenue growth and strategic partnerships. The company has seen significant increases in its cloud and AI-related revenues, driven by its aggressive push into these areas. With a strong position in the enterprise software market and a willingness to co-engineer custom AI data centers for partners, Oracle is well positioned to capitalize on the growing demand for AI and cloud services. Analysts have weighed in on Oracle's prospects, with 27 out of 40 analysts covering the stock giving it a strong buy rating. The mean target price is $307.86, representing an upside potential of about 66% from current levels. As we consider these developments, it's essential to take a balanced view, acknowledging both the opportunities and challenges facing these companies. While Oracle's debt levels and dependence on OpenAI are concerns, its strong cloud growth and aggressive push into AI are undeniable positives. In conclusion, the situation with Oracle and Broadcom serves as a reminder that even in the fast-paced world of tech and finance, companies must navigate complex challenges to achieve success. As investors and risk managers, it's crucial to stay informed and adapt to changing market conditions. Welcome back to the Riskwiser Zone. Today, we've been exploring the complex world of global finance and economic strategy. As we close out this episode, I want to bring your attention to a pressing issue that's been making waves in Europe. The European Union is at a critical juncture, facing challenges from within and outside its borders. With the ongoing war in Ukraine, the US reevaluating its role as a global leader, and rising tensions with Russia and China, the EU must navigate these treacherous waters carefully. At the heart of this challenge lies the need for the EU to reform its economic and financial systems. Experts have long recommended that the EU build a more robust capital markets union, strengthen its banking union, and develop common borrowing tools, including a sustainable defense financing mechanism. However, progress has been slow, with many initiatives stalled due to unanimity requirements and national interests. The current crisis presents an opportunity for the EU to push forward with these necessary reforms. By doing so, it can demonstrate its ability to act cohesively and strengthen its defenses, making it a more credible player on the global stage. The EU's large economy and credible central bank provide a solid foundation for deep capital markets and a sizable stock of safe euro-denominated assets, which could attract investors looking to diversify away from the US. The recent invocation of Article 122 of the Treaty on the Functioning of the EU, declaring an economic emergency and bypassing the unanimity requirement, is a step in the right direction. This move acknowledges that the EU cannot be held hostage by individual countries' vetoes when the stakes are existential. As we conclude this episode of the Riskwiser Zone, it's clear that the EU faces significant challenges, but also opportunities for growth and strengthening its position on the world stage. The key to success lies in the EU's ability to recognize the gravity of the current crisis and muster the political will to act decisively. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.